All right, let's move on to our first conversation. As 2025, winds down, it's been a year shaped by, tight monetary conditions, persistent inflationary pressures. Even though we've seen, elevated inflation, that's been on a downward trend. I've also seen currency adjustments and a cautious credit environment, all of which has tested businesses, households, and financial institutions alike. Yet, within these challenges, we've also seen, innovation, resilience, and new growth models emerge, particularly in non-interest banking and microfinance. I'll reflect on the key lessons from 2025 and looking ahead to 2026, examining macroeconomic expectations and opportunities for small businesses. Well, joining me for this conversation, we have Mr. Hamid Joda, the founder, Managing Director, TAJ Bank Limited. Great to have you on the show, sir. Good morning, and compliments of the season.
Thank you. Thank you very much. Compliments of the season.
Fantastic. So, looking at 2025 so far, what would you describe as the most, defining features of Nigeria's, economic environment so far?
Well, as you're aware, we had a tough start to the year. When we started, the Nigerian currency was not very stable, and fuel supply was also not quite stable in the environment. We had a lot of microeconomic issues in the beginning of the year. Interest rates were very high. When we started the year, inflation was around 33%. So it was a very difficult start to the financial year. But as the year went by, and with the policies that we had from MPC, as well as the fiscal side of the economy was able to show signs of strength by the second half of the year. So, in fact, now there is a lot of good news coming out of the environment. For instance, inflation is around 14.5%, which is a significant drop. That's more than 50% drop in terms of inflation. And interest rates, well, in terms of interest rates, we've seen some kind of tapering from the MPC, dropping from 27.5% when we started the year. I believe that very soon interest rates will begin to taper down. And of course, we've also seen some credit flow into the economy towards the second half of the year. And more importantly, we've seen currency stability, because currency stability is very important in an economy. You look at economies in the GCC where their currencies have been stable for the last 20, 30 years. And in Nigeria, we've not had that same kind of stability in place. But now, with the policies that we've had from the central bank, Naira is quite predictable. Naira is hovering around 1,450. So it's very predictable, and the economy is beginning to stabilize. We also have some predictability in terms of fuel supply, the retail end of the market, even though there are still some disruptions here and there, but there is a lot of stability in the economy going into 2026, and we are quite optimistic about what is actually happening in the economy.
Yeah, fantastic. I guess we'll take stability at this point. But how did, elevated, interest rates, even though we had one rate cut in 2025 from the MPC, declining inflation and, liquidity tightening, how did that reshape, banking operations, this year?
Well, it was quite tough because we've had, whenever MPC dictates rates, and especially when rates are up, it affects lending rates. So in the beginning of the year, rates were fairly lower, but by the time we started having tightening, in fact, from 2024, from now, we've had a significant jump in terms of lending rates. So that created some kind of issues for creditors. So that's one important thing to note in terms of credit. So that was quite difficult. So if you are running a business, number one, you see your rates, your lending rates going up as a result of the tightening in the economy. And of course, we've opened the year with inflation at around 33%. So that was also significant for businesses in terms of cost of running the business. So it was really, really tough. But now, and it was tough for everyone, not just for banks, but banks really felt the pinch. So it's always very difficult to meet customers and tell them that their lending rates are actually going up. So that was a difficult period for banks. But I think now we have some stability and predictability, as I've said earlier.
Right. And do you think, microfinance banks were able to provide some kind of succor, for small businesses, at this time?
Yeah, they were. But, as you're aware, the microfinance landscape is changing because a lot of the digital banks or neobanks that we have in the economy, they are operating under microfinance license. And they've really grown very, very big in the last 5 years. And that's one of the most remarkable things that we've seen in this economy. Microfinance banks, neo banks, growing significantly. In fact, today, one of the biggest neobanks has more than 50 million accounts. So they've really grown. And in terms of retail credit, they have devised means of pushing out retail credit out there to the market. So I think they've done fairly well, primarily because of the digital lending model that a lot of microfinance banks adopted within the year. So microfinance banks have fared quite well. The traditional ones haven't really, those who haven't changed their model to digital and those who haven't scaled haven't really had a very fantastic year because of the inflation, the currency stability issues, and so on. But those who have made the pivot to digital, they have done very, very well in the financial, in terms of deposit mobilization and also in terms of creating credit in the economy.
All right, so how do interest rates decisions, how does it impact, non-interest banks?
Well, it does because, non-interest banks are operating within the banking ecosystem. And whenever interest rates go up on the conventional side, definitely your customers will come to you and tell you that interest rate, the rates they are getting on their investment is going up on the conventional side, or maybe they are getting 18, 19% from conventional banks. And as a non-interest bank, definitely you have to respond to that by also increasing your rates, your investment rates or deposit rates. If you don't do that, you will have what is called displaced commercial risk, where your customers begin to move from non-interest banks to conventional banks. And you don't want to see that. So definitely by the time rates are going up on the conventional side, definitely on the non-interest side, rates will also move up. Likewise, on the financing side, by the time rates move on the deposit side, that means your cost of doing business has gone up. Definitely you have to also increase your financing rates. But one thing in non-interest banking is this. By the time you lock in and you create that financing, you cannot come back tomorrow and tell the customer that you are increasing rates. It doesn't happen. Okay, so that's one disadvantage that non-interest banks have. But generally, because we are operating within the banking ecosystem, whatever happens on the conventional side also affects the non-interest side. So when rates move up there, they also move up on the non-interest side. So that's the way it works.
Right, and earlier you did mention, some banks, neobanks, growing at an impressive, rates, in 2025. Recently, your bank emerged the largest non-interest bank in Nigeria. And I'm wondering, some of our viewers wonder, what does it mean to be the largest, by assets, in Nigeria? What does that pertain, really?
Well, it's a big responsibility, and it shows that Nigerians have accepted the non-interest model. Remember when non-interest banking started in Nigeria, there was a lot of skepticism. People felt maybe it was for one side of the country or whatever. But at the end of the day, we've been able to prove that non-interest banking is for everyone, regardless of tribe, regardless of religion, and all of that. It's a banking model that is open to Nigerians from all walks of life. So I think the growth of TAJ Bank and the compound annual growth rate that you've seen, and the emergence of TAJ Bank as the largest non-interest bank speaks to that in terms of acceptability of the non-interest banking model in the market. You look at Malaysia. Malaysia, for instance, 50% of the banking system is non-interest. And Malaysia is a far more developed economy than Nigeria. So also here in Nigeria, you are seeing a lot of growth. When TAJ Bank came on the scene, we had only two non-interest banks. Today we have about five. I'm sure before the end of the first half of next year, we'll have two more in the economy. So generally, Nigerians have embraced non-interest banking. Nigerians from all walks of life have embraced non-interest banking. And I think the future is looking bright for non-interest banking and generally for the economy. You've also seen sukuk issuances by the federal government oversubscribed by 600 and something percent. Recall that we also issued our own sukuk, TAJ Bank sukuk, during the year, and we achieved about 285% oversubscription. And that oversubscription came from everywhere, from all the states of the Federation, from all groups. So it means that the non-interest banking model is gaining significant traction within the Nigerian economy. I think it's good news for the country.
And all this, all this happening, even with some macroeconomic headwinds at this point. What makes this kind of growth possible? Well,
we still see opportunities in the economy. I personally believe that Nigeria is still underbanked. I believe there are still opportunities here and there. For instance, I gave an example with the neobanks. The neobanks started 5-6 years ago, and I believe one of the biggest neobanks has about 50 million accounts, and they've done it within the last six years. So we see a lot of opportunity in the economy, in spite of the challenges. You look at the economy is also growing. It's not as if we are in a recession. The economy is also growing, and especially for non-interest. People are yearning for non-interest, and I think that segment of the market is still underserved. Hence, you see a lot of institutions coming out to set up windows and also to set up non-interest banks. So we see that yearning, and it's not only in one section of the country. We see that yearning all over Nigeria now. People are yearning for non-interest banking. So with that kind of yearning and with the growth in the economy and the opportunities that we see, I think the trajectory is upwards, not downwards.
All right, definitely quite interesting one there. But, what lessons from 2025 would you say are most critical for financial institutions, navigating uncertainty?
Well, like I said, when we started the year, inflation was very high. In fact, all institutions have had to review salaries. We've had to cope with extremely high cost of doing business that seep through the year. Also, currency stability is one major issue, especially for banks that have opened lines for customers overseas. It's always very difficult for customers to pay down on those lines when the naira loses value. A lot of challenges keep happening, but thank God the economy is stabilizing and we are looking into the future with a lot of optimism. But I think the most important lesson is to look at all scenarios. In terms of your planning, you have to look at all scenarios. Don't just look at, okay, the economy is stabilizing or currency has stabilized, but also do what we call sensitivity analysis. Sensitivity analysis is what if analysis. What if something goes wrong? How do I react? So that is it. But I think if we are able to do that and do that very, very well in terms of looking broadly and looking at what challenges may arise in the economy, we'll be able to navigate through whatever comes our way, whether it's good or bad. And that is resilience, if I may use that word.
Fantastic. Well, we need a lot of resilience, at this point. But looking at small businesses, we know MSMEs, they face a tough year with limited access to, affordable credit. From your perspective, how would you say, most of these small businesses coped?
Well, it's been a very challenging year, especially the first half of the year. And MSCs are very, very important to the Nigerian economy. First of all, MSMEs create 84% of the jobs in the country, 84%. That is significant. The jobs that are created today in Nigeria are created by the MSMEs. That is one. Secondly, the MSMEs control not less than 50% of the GDP. They contribute not less than 50% of the GDP. So MSMEs drive the economy. And, in terms of credit, they've not really had a good run. Why? Because interest rates have been very high. And whenever you have interest rates at that level, at 30-something percent, 40-something percent, in fact, some MSMEs are borrowing at 45%. So there is no way you will unlock growth in that segment until and unless you have lower interest rates, or maybe you bring in some kind of partnership model that a non-interest bank is able to bring into the market, which a lot of non-interest banks have introduced partnerships with some of those businesses out there to unlock opportunities and unlock growth. But generally, I wouldn't say that MSMEs have fared very well, even though they are the biggest players in the economy if you aggregate them together. So it's been a very tough year. But I believe that now that inflation is coming down, I predict, although I'm not sure, but I predict that MPC may consider what is happening in the economy and say, okay, it's time to unlock growth. How do we unlock growth? Let's bring down interest rates and let's also encourage lending in the economy. And once that decision is taken, I'm sure lending rates will come down, and then you will begin to see SMEs enjoying credit at lower rates, such that they are able to bounce back and play the role they are supposed to play in the economy.
But seeing, what's playing out, in the economy for 2025, what's played out with inflation rates, tending downwards, that we had that first cut in 2025, then, now had a hold, from the MPC. Is that giving you confidence, in 2026 that we'll see, interest rates come down, drastically?
Yes, absolutely. I'm very optimistic about 2026, and I'm placing my bet on a very good year in 2026. Why do I feel this way? Number one, as I've said, the currency is predictable. The Naira now is predictable. Naira is trading. You can safely say that Naira is trading at 1,450. That is good for the economy. And that is what we are taking into 2026. And I don't foresee spikes in terms of loss in the value of the Naira. Possibly we may see some gain, but most important word there to look out for is stability, which we are seeing in the economy today. Now, the next thing is inflation. Where is inflation? Inflation, at the beginning of the year, it was 30-something percent. Today, it's 14%. You look at the components of the CPI, food inflation is tapering downwards. There is predictability everywhere in terms of rates, telecom rates, in terms of oil and gas and so on, at the retail end. So by the time you aggregate all the components in the CPI, you find that inflation is likely to even taper a bit downwards, maybe 12%, I'm not sure. That is also quite significant in the economy. Third, you are also looking at the well-conceived recapitalization exercise that the central bank embarked upon. It will round up by March 31st next year. And by the time we round up, banks will have a lot of capital on their balance sheets. Now, what will they do with the capital? They will be looking for outlets, for credit outlets. And that's why I'm optimistic that credit will flow to MSMEs and credit will flow in the economy by next year, because banks will be looking for opportunity to deploy funds. So if you aggregate all these indices, you are looking at a year that is going to be very good for the country in terms of bouncing back, in terms of the growth rate in the economy, and all the other economic indices. I'm very optimistic about the year.
All right, businesses, you heard it from Mr. Jordan there, credit will flow in 2026. And we're definitely looking forward, to that. But before I let you go now, I know you recently signed an MOU with NACON, that's National Hajj Commission of Nigeria. Can you explain the motivation behind this?
Well, it's an initiative by the National Hajj Commission to give an opportunity to intending pilgrims to save on a small-scale basis. Let's say you have a target of going for the Hajj in the next 5 years. You can start saving today. So you save, if I may use Nigerian parlance, small, small. So you can embark on some kind of target savings exercise, take a 5-year horizon. Within 5 years, you would have amassed enough money to pay for the Hajj. Last year, I think pilgrims paid about 8.5 million. Not many Nigerians have that kind of money sitting down. But if you give Nigerians an opportunity to save in bits and pieces, then they will be able to have some kind of target towards going for Hajj. And that could be maybe 2 years, 3 years, depending on the horizon that any depositor would want to take. And I think it's very good for pilgrims. But more importantly, if you look at other jurisdictions, for instance, Malaysia, they've had this kind of program running since 1963. Today, in their Hajj savings, they have $28 billion. And with that $28 billion, they've been able to make significant impact in the economy. Through that fund, they invest in banks, they invest in infrastructure, they invest in significant impact in the economy. Indonesia started their program in 2017. Today, they have about $10 billion sitting in that in the kitty. And with that kind of volumes, they are able to make impact in the economy in terms of investments, infrastructure, and what have you. That is my prediction. In the next few years, by the time Nigerians key into this, there will be a large pool of funds that the National Hajj Commission can use to impact in the Nigerian economy. So I think it's a win-win for both sides. For the intended pilgrims, for the National Hajj Commission, it's good for their planning purposes, and it's also generally good for the economy, because by the time we have a large pool of funds, we'll be able to intervene in infrastructure, we'll be able to intervene in critical sectors of the economy with that kind of large pool of funds. So it's generally a win-win, and that's what it's all about.
All right. Generally, I believe, with what consumers, the average Nigerian consumers, been through with, higher prices, affordability issues at this point, I guess the small package or the small model, we need a lot of that, for housing, buying cars and buying the things that we need, in 2026. Well, thank you so much, Mr. Hamid Joda, founder and managing director, TAJ Bank Limited. Thank you for coming on the show today.
Thank you. Thank you very much. Thank you.